Aloha. Hey, it's Julie Ziemel, 365 Hawaii and Real Broker as a realtor. And you guys are here for the September update on the island-wide experience of real estate and mortgage. And today we have some exciting news from our resident mortgage expert, Joe Egan from Egan Team and with an Egan Team. And then we also have from East Hawaii, we've got Amber Haley with Real Broker. Raise your hand. There you go. We've got Andy Madrid, KW Big Island from South Hawaii. We've got Janna Mahoney, KW, and she's going to be talking to us about South Kohala and North Kohala. And we've got Eric Zemelas, who is going to be talking a little bit about like some insurance issues around condos. You got me, who is going to give you guys the West Hawaii update a little bit because Delania and Lance cannot be here. But let's start with the money, because as we know, things have happened in the rate department. So let's bring you guys some good news. Joe?
Yeah, so obviously, as most have probably heard, the Fed has decided to cut the Fed's funds rate by 0.5% or 50 basis points at their September meeting. That was last week. Now, in regards to mortgage rates, we have seen a decline leading up to the Fed starting to cut their rate. So typically, honestly, when the Fed cuts their rates, it tends to get a little worse for mortgage rates the week after. That's very typical. So right now, conventional mortgage rates sit at about 6.19% on a 30-year fixed, which is down from the high of October of 2023. We were hitting 8% for a mortgage rate. So we're down by a significant amount there. So just kind of the past week, we've kind of settled in. Rates have actually gotten a little worse over the last week by 0.04%, but over the last month, rates have gotten better by 0.25%. Over the last year, they've gotten better by 1.32%. So just on a standard conventional loan, interest rates sit at about 6.12519% on a conventional loan, 15-year kind of hovering around 5.5%. So the good news is we've kind of hit that first Fed rate cut. We anticipate at least 7 more.
7.
Based upon the Fed dot plot chart that they sent out. That doesn't mean that all of 2025 at their meetings, there'll be a Fed cut, but the majority there will be. So I was talking to a colleague today, and we were like, okay, where do we think rates are going to settle, right? So I was actually investigating this leading up to this meeting. So looking at the last 44 years or 8 Fed cutting cycles, what we do for the mortgage rates is the mortgage rates are kind of tied to the 10-year treasury. And there's a spread between the 10-year treasury and mortgage rates. Typically average, the spread between the 10-year treasury and mortgage rates, that sits about 1.7%. Right now it's at about 2.375%, which is a little bit higher, which is kind of known to happen in a volatile market like we're in today. So I was looking at rates and I said, okay, looking at the past 8 Fed cutting cycles, the 10-year from beginning cut to end cut got 150 basis points better. So if we calculate that, that gives me a 10-year treasury of 2.29%. And factoring no improvement in margins for rates, that if we just add the 2.375% in margin that is calculated currently, that would lead us with a 4.6% rate. Is kind of where we'll settle at based upon the past, right? Now, nobody knows how quickly that's going to happen. My guess is over 2025. Everything that I hear, that's kind of the year of the 5 interest rates, 5, conventional rates. And then I think ultimately in 2026, I think we'll settle in that 4.5% mortgage rate, depending on all the economic data, inflation, unemployment that comes out leading up to.
Well, and hopefully during that time frame, they're building a heck of a lot more homes too, because then as more people hit that affordability rate again, then hopefully we don't get a redux of 2021 when everyone jumped into the market and then the prices start skyrocketing.
Right. I think that's their biggest concern because the data reads every percentage in interest rate that we get better, 5 million more people can now qualify for a mortgage, right? And that's nationwide, obviously. But that's a significant bump to people that can get in the market and know whether they will. And then we still have our locked in people that have like a 3% mortgage on their current house. What will it take for them? anticipation or kind of economic data that I read is once rates hit the fives, I think we'll start seeing a lot of those people start to get more comfortable in listing their home, move up, things like that.
Yeah, that's fantastic. Okay, good. And then strategy about taking advantage of what you think is going to happen. Are we going back to that buy now, change your rate later experience, or I mean, can people still do that?
Of course they can. Yeah. Yeah. I mean, again, I leave like I always look at the past. The past is a big indicator for me, right? And I'm a big believer in I don't let interest rate influencing me on buying or selling real estate. Like if you look at when people could have got a 3% mortgage, and I know that I've said this on previous calls, but if you were to purchase in 2020 and you can get a 3% rate, but you had to overbid on a property by 60, 80 grand just to get your offer accepted or looked at, waive inspection, waive appraisal, was that necessarily a good time to buy? Some people will say yes, some people will say no. Now you're not competing with people, right? As many people. So I'm not a big believer on having interest rate lead your decision on whether to buy or sell real estate. I think it's always a good time. Hindsight is always 50-50. I think if you've asked the people, like I was doing, I do mortgage reviews every year for people that purchased a year ago.
Mm-hmm.
And I have people that purchased a year ago that have a 7% rate, but have $50,000 in equity in their home in a year.
Nah.
That's still fantastic, right? I don't think they would regret buying just
Yeah,
because of the interest rate.
that's
Now we
that's
have
a
to make
good
sure,
point. Right.
right?
Yeah, because prices of
Yeah,
houses are continuing to go up. Maybe that double digit, but they are continuing to go up.
right. Yeah.
Yeah. Good, good, good. Okay. And then in terms of like, and we're gonna be discussing this a little bit later into this experience about people trying to buy condos, and with the insurance rates going up. How are you guys like starting to do more of a drill down, like looking for that information like faster and like more aggressively now that this is happening here in Hawaii? You probably have seen it like in other places of the country too. I don't think we're the only
Yeah, it's
ones.
happened all over the country, but we're trying to get ahead of it as much as possible, right? And we're trying to partner with the listing agent. So essentially, when we first submit a pre-approval on a property on a condo,
Mhm.
first thing that I do is try to get those condo docs as soon as possible, right? Because we want to make sure that we look at it. We want to look at their budget. We want to look at the CCNRs. We want to make sure that we can get traditional financing on this particular unit. So we're trying to get ahead of that as much as possible now. And usually the seller of the property can get it quicker and cheaper than we can, right? So we're trying to partner with listing agents. When I send a pre-approval on a condo,
Mhm.
I'm sending them the list of condo documents that we would need for that particular file, because depending on how much that borrower is putting down, we could need more or we can need less information. So yes, we're trying to get ahead of that when I send a pre-approval on an offer that's being submitted.
There you go. And then I just found out because we're in the middle of this problem that Fannie and Freddie are being more picky in terms of what they're willing to loan on, and that the master insurance policy sometimes has to be a certain percentage, right? So ours was like the one we're dealing with has 7%, and Freddie and Fannie want 5. And you really can't change that as a buyer to come in and say, oh, I need a lower, you guys need to put more money aside. This is too bad. Do you have a way of when some people says, oh gosh, I thought I was going to do a Freddie and Fannie like loan. Do you have ways to say, okay, that's not going to go. I'm going to go over here instead and do something else, like a private equity loan or something? Or what do you do when you have that problem?
Yeah, so each bank should have different portfolio products that can lend on those particular, it depends on what the issue is, right? There's like when we submit an offer on a condo complex, I tell the buyers, we have to make sure you qualify, but now we have to make sure that the HOA qualifies, right? For Fannie and Freddie, there's a list of stuff that we have to meet. They have to do a certain amount in reserves. So many people can be investors in the complex. So many people can be a single unit owner. So there's a lot that goes into it. So, but yes, to your point, there's different avenues that every bank should have, that if it doesn't meet Fannie or Freddie, that we can place it at this particular bank. The terms may change a little bit, right? They may need to put a little bit more down or pay a higher interest rate for a period of time. But yes, there's different avenues that we can use to still finance in those complexes.
Right. And that's another benefit of going through a mortgage broker is that someone like yourself can say, oh, it's not going to work here, but let's try this and let's try this and this. And you have relationships with different people that you can actually run that through, right?
Yep, exactly.
Okay, cool. Okay. Anything else on finances, mortgages? You might hang out. Okay.
Yeah, one note I want to bring up is just conforming loan limits, and I kind of put this down. So Hawaii conforming loan limits are going up from like 1.149 million. So currently it's 1.149,825.
Yeah.
And it's going up to 1,203,975.
Oh, that's great.
So
That's about the average price of a house. Almost exactly.
I know, right? Exactly. So what that means is you can still get a conforming loan, conventional loan, possibly put even 5% down all the way up to 1.25 million on a purchase price.
Oh, that's great.
So it's a little bit more flexible until once you get above that, you get into jumbo financing, which typically gets a little bit tighter, maybe higher interest rate, more of a down payment, things like that. So
that's good news.
Great news.
Good. Okay. Okay, so let's start on the back end of the wonderful island that we live on. Let's start with Amber. And then we'll do Amber in East Hawaii, then we'll move up to South Hawaii, and then round the back to Janna, and then I'll throw some numbers at you for North Kona. So Amber, what's going on your side of the island?
Yay. Okay. Over here in East Hawaii, we're going to talk about the stats from the Puna district and the South Hilo district. So we have we're focusing mostly on single family home sales from the last month here of summertime. And we'll start with the South Hilo district. So there were 15 single family home sales, and that was a little bit less than we saw in July. It's obviously the slower of the two districts that we focus on over here. Also a year ago, a little bit less home sales going on. No real surprises there. The median sales price was $590,000. And that was down a little bit from the previous month. In July, it was $650,000. And a year ago, this very same month in the South Hilo district, it was $585,000 was the median price. So not much change from exactly a year ago. And days on market, though, is a little bit interesting. So last month, 68 days on market was what it was for all the home sales. And this month it's 61. So it went down a little bit. And a year ago it was at 65. So not a huge change, but I do think that it is notable that it wasn't like more days on market, because that is a trend that we have been seeing.
Right.
Okay. And then we want to talk about our sales, right? Our list to sales price. So how this affects you all is, you probably want to know how close to the list price do I need to offer? And it is definitely going to be like case by case. And that's why you want a real estate agent to help guide you on this. But for the final list to sales price for those single family home sales that we just talked about, it is 94.69%. So you could say there was a
like we do.
Just as long as you understand what we're talking about when we say that. And then that was very similar to the month before, where it was 95.17%, and a year ago it was 94.2%.
Okay, so
not huge changes.
Yeah. Which, I mean, that's what we're talking about what the Fed wanted, and this is what the Fed wanted. They wanted a flat market. So,
yeah. All right. So let's talk about the Puna district, where it's a little bit more exciting because we got more home sales. 75 single family homes closed in the month of August this summer, and the median price was $396,000 for those single family homes. And that's exactly what it was for July as well. There were 72 single family homes that closed in the Puna district in July. Same median value exactly. So not much change there at all. And then a year ago, I do think this is a little bit noteworthy. The median value was $350,000. So it has, for this snapshot of data, that has gone up Another thing kind of noteworthy is the days on market in the Puna district this month, which is different than last month. So this month of sales, it was 44 days on market was your average, whereas in July it was 68 days on market.
Yeah. It seems like I remember you told me how they were just lagging all summer. So
Yes.
now it's picking up again.
It's picking up a little bit more. And then, a year ago it was 60. So it's even significantly less than that. So it will be interesting when we meet again in a month or in a few weeks, maybe, what all of the single family homes for the full month of September, how many days they're sitting. I really will be interested in that data to see if this is a trend that will continue or if this is just kind of like a one-off month. But the days on market is really important for all of you home buyers out there. It is a stat you want to pay attention to because it does affect your negotiating power. Generally speaking, the longer days on market, the more negotiating power you usually have. It's one of the factors for sure. And then as far as list to sales price goes, for the Puna district, it was 94.68% final list to final sales price. And we compare that to the month of July where it was 92.85%. So a little bit closer to list price this month than the month before. And then a year ago, it was almost exactly the same at 94.57% list to sales price.
There you go. Well, all the PR that you did about people can get, 7% off the price of a house in HPP, people must have jumped in on those deals and, because bought a bunch of houses in the spring in the summer. So, well,
yeah.
Okay.
And speaking of HPP really fast, I could throw in a little bit of stats on that because that is like truly almost its own section in our market updates because that's where most of the transactions honestly take place on the east side of the island. But the average days on market for the active listings in Hawaiian Paradise Park, so that's everything that is actively on the market today, right now in this moment, just is 77 days on market, which is longer than the average. So the homes that are still sitting, to me, when I look at the data, it's, definitely there are certain listings that are on the market for a reason, like permitting issue or certain things like that, longer than other ones that will move faster. So again, another reason why using a realtor is super, super important. Also interesting to point out, the lowest price single family home listed in HPP is $178,000 and the highest is 1.6 million. So huge range there still.
Right. And I remember for like months during like when the housing market was on fire, they always said well-priced, well-groomed homes will go faster than the ones that have, things that are wrong with them. I think in 2021, when everybody was buying anything that they get their hands on, it kind of switched, but it looks like it might be back to doing that again, where the good stuff goes first and goes fast.
Yeah.
Okay.
Yep.
Okay. Thank you.
Always very nuanced.
Yes. Okay, then let's go to Andy, who's going to talk a little bit about what's happening in South Hawaii. And will you please remind people kind of what the areas that you're covering for your update?
Areas would be Miloli'i beach lots, which I don't talk about very often, but I decided to add it in today. Then which is considered Ka'u as well, and then Hawaiian Ocean View Estates and Ranchos, and then Discovery Harbor.
Okay.
And so going through, we've talked about this before, that we have a large amount of properties in Ocean View that are unpermitted. Right now, there are 47 homes on the market. 14 of them are unpermitted.
Wow.
Price points for these range from $78,000, obviously unpermitted, to $925,000, with the average being $378,000. Almost $379,000. That's the average. And the days on market's 124.
Oh.
Yeah, so it's kind of, I think it's kind of average, typical there. We've gone through spikes where right now it's low. It's a combination of high interest rates for people, unknown, things that are happening in the economy or just world events. I think that's why we're seeing that increase in days on market. Properties that are under contract, there are 15. Price between $104,000 and $598,000. So the average being $263,000. Average days on market, 125 for properties under contract.
So people still
And
have, you can like, kind of pick and choose at your leisure a little bit in that market.
yeah, yeah. If something's priced really well, it usually will move pretty quickly. But the issue that we have here, aside from the world events and the higher interest rates, we've been having, is we're also in lava zone 2 for all these neighborhoods.
And didn't we just have 3 eruptions this month?
Yeah, so the homeowners insurance is killing people.
Oh yeah.
And people choose not to carry it. I think I mentioned last time, buyers that closed on a property, they leveraged the California properties. They could pay cash for this one and avoid the homeowners insurance.
Right.
Because the typical cost of homeowners insurance in Ocean View is probably about $5,500 a year. And we're talking about modest homes.
Yeah.
So
Yeah.
it's kind of
So let's go back on that one. Let's say it was 5 years ago. How much would it have been 5 years ago?
So I had insurance 5 years ago. What was I paying? $1,600.
Ooh.
5 years ago.
Okay.
Because my house was on 2. I live in Ocean View.
Yeah.
And every year it would go up. It was 1,600, then it went to like 1,704, then it went to 1,800, then it went to, I think the last year I carried it was almost 2,200. And then on a fluke, I was shopping for insurance because my carrier was pulling out of Hawaii and I knew I had to find new insurance, or I wanted to. I could just not carry it. And I actually have a carrier, Liberty Mutual, and they're dirt cheap, relatively speaking, $878 a year.
No.
And I told them I'm in lava zone 2. They're like, we don't care.
Huh.
So I hand
Right
out.
now you're carrying a homeowner's insurance policy for less than $1,000 a year.
Yeah.
That's great. Liberty Mutual.
Liberty Mutual.
Oh, that's great. Okay.
It's good coverage.
That's great. Wow. Yeah, from $5,000 to less than 1,000. That's why you're in this watching this show, guys. That's a great little tip there.
Because I know, particularly on the east side, Amber can speak to this. I mean, they really struggle over there,
Yeah.
In those neighborhoods. So anyway, getting back to the market. So in the month of August, there were 11 sales in Ocean View. That would be Ocean View and the Ranchos. Price between $89,000, again, unpermitted structure, to $649,000. That one closed for $630. The average days on market was 67. But when you look at the sales price to list price ratio, it's still pretty strong, 95.41%.
Well, that's doing better than Kona and East Hawaii. So
yeah. So
but it's not, again, it's kind of like what Amber was saying. Is that for houses that are like bomb diggity? I mean, that they're permitted. They got to do.
Our price point over here is so much lower than people know they're getting. I mean, so the typical off-islander that comes here, they see a lot of value, and they're like, sure, I'll pay that, because they're coming from someplace else where they made more money.
Yeah.
They sold another property and they're downsizing, so when they come here and see that they can buy a house for, say, $600,000, they think it's a bargain. They're ready to buy it because,
so they're not going to haggle too hard.
Yeah. And because you pick through the inventory, the stuff that's selling, they're getting, when it's low priced, they're just going to get their price. Someone's going to say, yeah, I'll give you 89,000 for it.
Yeah.
At 649, okay, they sold for 630, but on average, the list price sales price ratio is still pretty strong.
Yeah, that's great. It's great. And let me just ask you too, because we always talk about Discovery Harbor. Is that kind of where you're going to get a $600,000 house?
Yeah. So Discovery Harbor, their prices, like I sold one here a couple months ago, 725. That's
lava zone like 7, right?
Yes, I think it's lava zone 6.
Yeah. So if some people who are like thinking about that, if you want to still live in Hawaii, you still want to live down in that area, you don't have to live in lava zone 2.
The climate is really great. I really like Discovery Harbor. It's a golf course community. They have a homeowners association. It's incredibly reasonable. Couple $100 a year, 300 maybe, but I think it's less than that. There's no requirement to join the country club. You can if you want to, and they have a golf membership and they have a social membership, and they have a big clubhouse and a restaurant there. The green spaces and all the lawns are mowed. You know, the HOA takes care of it. And they have a patrol that goes by every single home twice a day.
Mhm.
All you have to do is call up the office and say, hey, I'm going to be off island for 4 months, like my clients are. Patrol goes by their house twice a day to make sure there's no problem. It's all part of that,
Yeah.
what, $200 to $300 a year HOA fee. So it's kind of great, you know. The climate's really good. The downside for living in Discovery Harbor, the South Point area in general, is you're so far away from everything. For
Yeah.
some people, it's not a big deal. I mean, but you want to go to Costco, an hour and a half, easy. You want to go to
Yeah.
Hilo, an hour and a half, easy. You
Yeah.
know, but
But I'm telling
there's
you, people from Texas, it's always perspective. People from Texas
Yeah.
say they'll drive all day long. It's not that big of a deal. It's
Well, I came from Southern California, and it's not. I used to drive 100 miles on a motorcycle for a hamburger
yeah.
one way because the hamburger was great. It was a great location. So Discovery Harbor, they only had 4 sales during the month of August. I'll back up. There's 13 properties on the market now in Discovery Harbor. Price between $474, 2-bedroom, 2-bath home, a little bit older, nice condition though. $798 is the high. And the average price is $649. Days on market's 91.
Hmm.
You know, pending there are 4 between $375 and $775. So surprising that you can get a property in Discovery Harbor under $400,000. But I've been by the house. I know where it is. The house is nice. Location is a little challenge. It's on a busy road
Oh.
and it's in a depression. There's no ocean view from that property.
Oh.
You know.
Why
So
would-
yeah, so 75 to 775 with the average being 575. Days on market 102. Those are the ones that are pending. Now, there was 4 that were sold in the month of August, priced between 475 and 769. The one for 769 closed at 750. Sales, the average days on market is 64. So we are seeing an increase in our days on market, but I think that's going to shrink.
Yeah.
And the sales price ratio is 96.68%.
Yeah,
So they're getting their numbers. You know, I talk to people that say, hey, I'm looking for a foreclosure. You know, I want to buy a bank-owned property. And I ask them why. And usually because I think I get it for 20 or 30% below market. No, you're not.
okay. Good to go to tell people that too, because we get people saying, "Give me a foreclosure property west of where I
You're
am."
thinking about buying a bank-owned property, you want to buy a foreclosure. Do we have them? Yeah, we do. I'm seeing a few more of them pop up here and there, but the banks numbers, they're strong. You know, no one's going to get a great bargain. I tell them, here's the average sales price to price ratio. That's what you're going to expect to pay for the property. You're not going to get some bargain basement price.
Right. There's no more bargain basement price homes, I think, anymore.
No, I think I bought the last one because I've said it before, my house was a steal. I had to buy it. It was so good. I mean, I got it for cheap.
Yeah. Oh, and just real quick, Amber, just to throw this out at you, since we have had some of the eruption experience lately, and you know that has happened. Did you see anything happen in the market during that time? Did people drop out of escrow, or did anything? Was that just a blip and nobody cared? I mean, how'd that go?
For this latest round, I didn't notice it a super lot, but I have definitely in the past. And I think the biggest way that it like can affect us over here is with insurance, but we were already seeing that effect anyway. I actually weirdly did have some people reach out like wanting to buy in a risky lava zone to get like a crazy killer deal, but I don't think in a very serious way. But I didn't see it super happen this time, but it's definitely something that could and will again. And I don't have any fun stories about this one.
I think we're going to see. I mean, I think the market. It's not my market that it's Amber's. She's reporting, but I've got clients that have bought and sold or trying to sell in Leilani Estates. That's a tough place to be because it's like, they call up, I don't want to live in Love Zone 1 or 2, but I want a really good deal. I'm like, okay, you don't have to, but just know that you're going to give up 40% of the island that personally I think is the most beautiful part of the island. My favorite neighborhood, hands down, Leilani Estates. If I could do it right now, I would move there tomorrow.
There you go. There you go. In fact, I just met a woman that bought in Leilani Estates right after the eruption, because she got a screaming deal on a house that used to be, let's say, I don't know, back then, I guess the houses were like average for 350, and then she got it for like, I don't know, 200. But Michael, you live right next to a massive wasteland. And she's like, oh, my house is faced this way. I don't see it.
Yeah. But you know, one of the things about being there is I think that you feel, for me, I feel really close to the island when I'm in that neighborhood. It's really, truly living and breathing. You know, that's what I think of the island when I'm over there. It really is neat. And I do. I was like, I'm always scouring to see, is there an acre there I could snap up somewhere that I think is a good value?
There you go.
Yeah. And just a little context for our listeners who might not know this, Leilani Estates is a neighborhood in the Puna district in East Hawaii that is located in Lava Zone 1 on the lower East Rift Zone of Kilauea volcano. And just so that our listeners also get one other side of perspective, I have fallen in love with the house in Leilani Estates. And as a realtor, I would not buy there because it doesn't. So just so you have another realtor's perspective on this as well, I do understand why people do buy there. And all of the things he's saying is true. And it is a really magical place. But because of how it affects insurance and the risk and financing and all of that, like, just so everyone gets the flip side of that too, I would not invest.
Can you also bring up the fact that it was the 2018 eruption that took out about,
and that 2018 eruption took out a lot of homes in that neighborhood.
Yeah. I always send them the USGS YouTube video so they can watch. It creates
this is the one where there's as I remember, there's a 75 to 100 foot swath of lava running at 40 miles an hour through that whole area. So
I always want people that are considering it. I said, I absolutely love it. And here's why, but you need to know. This is what you need to know. I make sure they all see that video because it gives them a very clear perspective on what it is. I think it's a beautiful place, but absolutely everything Amber says is absolutely things to take into consideration. The cost of insurance. For me, it's like, I'd like to live there. Would I buy a big old gigantic house there? No. Would I do something super modest that if it got blasted away, that I would not be, financially strapped? Yeah, I could see that.
Well, I'll tell you guys, one person that works for is this woman. She doesn't have any heirs. And so the chance of a lava flow coming, and again, you don't know in the world, but the one that went through the first time was 1955, and it didn't happen again until 2018. So you could live a lifetime before you might get hit again. And so for people who are not passing on a piece of legacy real estate, it could work. So, there's a butt for every seat. So, okay. So Janna's been trying to get back in, but until she does, I'm going to give you guys, a little bit of the information that I have been given to read to you. So I'm going to make myself, the person here. Hold on. This is like fun here. Let me see. Okay. So, if you want the up-to-date update on what's happening in North Kona, Lance did do one 2 weeks ago that is on the YouTube channel, and he's also going to be doing the fresh one for the September numbers. I think that's next week. So I'm going to give you just some basic numbers here. The median price of a house in North Kona right now is running at 1.231 million. And interesting to note that Joe Egan just told you what the jumbo rate is, and that is almost exactly the median price for a house in North Kona is what you can get a jumbo rate for. The current units for sale are 35, and the average days on the market 79. So I think our market definitely has slowed down. And to back that up, the final listed price to sell is 93%, which is pretty low for North Kona. I mean, this is coming from, like, it used to be 101%. I don't think I've seen it below 96. So 93 is pretty, that's competitive for if you want to go in there and make a deal. That's housing for 7% off. So, and then in terms of sales, we had 33 single family home sales at this time last year and 35 this year. So it's not that it has dropped off in terms of want. I think people are making more negotiations, and that's the reason why we have that lower listed price sale. And houses have been sitting on the market a lot longer. So I do think that there is opportunity in this market. But I do want to talk to you guys a little bit about what's happening with the condo market. Okay, so Janna Mahoney from KW, she had to leave the meeting, so we are putting her into the mixer so you guys can learn more about what's happening in the South and North Kohala regions, including Waikoloa and Waikoloa Village. So Janna, tell us a little bit about what you are seeing in the market in those areas.
Okay, so Waikoloa Village is about 5 miles up from Kohala Coast. Cute little neighborhood, cute little village where I happen to live. And we right now have 25 active listings in Waikoloa Village. The range is $529,000 to $1,990,000, but the median list price is $1,175,000. So Julie and I were just talking about that. Like it's still pretty high up here. However, the average days on market for those 25 active listings is 148 days. So we do have some inventory available, but it takes a little bit longer to move. In August, there were 8 homes that sold in Waikoloa Village, and the median list price for those houses that sold was only $902, so a little bit less. And the days on market was 35 days. So what this tells me is the ones that are priced fairly move quicker. So you've got 35 days on market for those houses, whereas the ones that are kind of sitting there have up to 148 days, right? So that's kind of telling you the story of what's going on.
Yeah.
And also, this is also very, very interesting. In terms of pricing strategy, sellers received about 97.3% of their original list price of the ones that sold. So there's still pretty strong demand up here.
Yeah. In fact, I don't know if you, when I was discussing with what's happening in Kona, it was like down to like 90, 92, 93%. On the other side, when those houses, when they eventually try to sell those houses and they've been on the market for 100 and some odd days, it'll be interesting what that one looks like.
Right. Absolutely. So, I think if you're a buyer, it's kind of with all that's going on with the inventory and all that's going on with the interest rates, I think it's like, don't wait, don't wait. Because the ones that are good deals are going to go pretty quickly.
Yeah.
Waikoloa Village condos, totally different story. We've got 26 active condos in Waikoloa Village, from 397 to 685. And the average days on market for these is 68. So let's see. Fairway Terrace has 5, Paniolo Club 2, Ilimilani 5, Waikoloa Hills 8, and Waikoloa Hills. Villas 2 and Makana Kai has 4. The average median list price is $485. So you've got a lot of active listings right now in Waikoloa Village and a lot of different condo complexes. 1 sold in August.
1.
Which is crazy. There was one in Waikoloa Village that sold in August, and it was $1,030,000. So it was one of the
Nicer ones.
One of the nicer ones, right? Had a list price of $1,125,000. It sold for $1,030,000 in 13 days. So in Waikoloa Village, if you buy a condo, you have the condo HOA, but then you also have the Waikoloa Village HOA, which is like $90 a month.
Yeah.
So you buy a house, you buy a condo, whatever, you have to pay the $90 to the Waikoloa Village HOA. But if you buy a condo, you also have to pay the condo. So that's the one that's gone way up. The Waikoloa Village is really a pretty good deal because you get the discounted golf, you can take free, free swim aerobics and have a lot of benefits for that.
Yeah.
So that's pretty reasonable, $90 a month, but it's the condos that are doing. So
what about down in the Waikoloa, like let's build a investment piece of property experience? How's that?
Okay. In Waikoloa Resort, which is just down the hill from us, right? So the condos, let's start with the condos. Okay, here we go. 31 active listings from 875 to 3,975,000.
Mhm.
Median is 1,360,000.
Mhm.
Average days on market is 87. And by far the most you see is in Kohala, which is kind of the more expensive condo complex down there. Same thing. I'm sure you've got the same issues with the HOA, price, HOA increases. In August, there were 3 condos that were sold, and the median sold was 940. And let's see. Oh, this is interesting. The sales to original list price was 93.5.
Ooh, okay, so a softening market there as well. It would appear, however, that if you have rising HOA fees, that because tourists are paying to live there, that you would basically pass on the cost to them.
Right.
Whereas the people who are actually working in Waikoloa Village don't have that opportunity. So-
Absolutely. So all of those complexes that I just mentioned down in in the Waikoloa Resort do short-term vacation rentals, and there's a lot of short-term vacation rentals down there.
Yeah.
So
yeah.
absolutely, that price is definitely going to be passed on, but it still has to be calculated into your, when you're looking.
P&L.
Yeah, is this gonna cash flow? You have to definitely look at HOA.
Thank you, Janna. And we'll go back to the regularly scheduled program here. I'm going to bring everybody into this conversation. Hold on. So the question is, and Eric, if you want to start this and then everyone can talk about it, what's happened with the HOA fees in the last few months?
It's been going on for a while now. And this all started back with the idea that it started in Florida, actually, with all of the crazy weather that they've been having in natural advance and everything that's happening. And the problem is that with the condos is that there's been so many problems nationally that the insurance has not been able to keep up. And then we were sort of out of the picture of that until the Lahaina fires, and that kind of definitely brought it home here to Hawaii. And so then they started looking at whether the condos were insured properly and what it would cost to do that properly. So the insurance has jumped pretty dramatically here, and it's the question. And some insurance policies have already started, and some have not yet. They're doing it all this year. It depends on when their policy is renewed. But the insurance rates have gone up anywhere from 200 to 1,000% in the last 6 months to 8 to 8 months or something like that. So it's definitely caused a lot of issues with trying to buy a condo, because all of a sudden now your HOA fees could add $300 to $500 a month extra onto the HOA fees. And we've heard of some HOAs coming as far as $1,600 or $1,700 a month for a 2-bedroom, which starts to definitely impact your ability to buy condos and making it worthwhile if you're going to live there. It seems to be that a lot of the people that are renting them out are not quite as concerned, because that's sort of eaten up in their cost of business. But if you're sitting there living in this house, in this condo, and all of a sudden you're paying, $1,600 a month before you get your mortgage or property taxes or anything else, it starts to get a little steep.
Okay.
So that's basic outline of what's going on.
Right. And so for all 4 of you guys, and I'll throw a little bit too if I had it, how's that affecting the market? So are we seeing people giving up on condos, heading straight to single family homes? Are we seeing people giving up on condos in Kona and moving to East Hawaii or South Hawaii? And then for Joe, are you seeing people all of a sudden had this dream to be able to buy and now we're no longer qualify and you're just jumping out of the market completely? Where are we seeing? So Eric, we kind of give us your thought process and what you're seeing real quick.
I'm seeing that I think, but personally, I think it's going to affect condo prices. They're going to have to come down just by nature that, it's too much. We were already at a pretty high point for condos in general. And I think that this is that final straw that's going to sort of let the air out of the tires. And it looks like that, just by watching the condo prices, it looks like there's a lot of cost deductions going out on the condos that are for sale right now.
Okay.
And as a matter of fact, we saw one that was had a $40,000 decrease because of this reason, because they couldn't get it off the market at their original price.
Right. And that's why maybe contributing to this 92% cost to think. Andy, what you're thinking? What are you seeing out there with people trying to get condos?
Definitely the insurance issues, the assessments are huge factors. I mean, some people, all of my people that are looking for condos, as I had mentioned earlier, they're all looking for investment property.
Mm-hmm.
It's a place that they want to buy something here, but they can't get here right now. And nobody really knows what things are going to look like in the future. I think the assumption for most people is that overall the prices will continue to increase. They may increase, then we may take a drop, but then over time, I mean, real estate, you own it and you get this appreciation. So they're looking at, a timeline of maybe, we won't live here. Right now we're buying the investment because it'll probably be 2 or 3 or 5 years before we get here. But yeah, we're asking more of those questions. We talk about the assessments, insurability, and just kind of where we're seeing things go to. But, to Eric's point, maybe right now it's sort of, are we going to take a wait and hold pattern? Like most of my people are not going to buy this year. They're all going to wait till next year. One is everybody kind of is going to wait till after the election, although I don't know how much that, if you look at every election cycle, everybody does this.
So I got a little side note on that, by the way, Andy, and that is we went to the Inman Connect conference, which is the national real estate, all of what's happening new in national real estate, and they were saying that 8 out of the 10 elections the prices go up after the election. So it's once you get, it's always there's indecision before you get there, but once you get there, it tends to make it a little, everybody seems to relax and go back to buying.
Exactly. And this will be no different. But so I think that people are going to kind of just wait because it's the election. It's just everything that's going on. I think that, there's a large majority of people kind of across the country think that everything's kind of getting overinflated. I don't think we're in a bubble. There's these naysayers think we're just going to crash and burn. And I'm like, yeah, no, we're not. But for condo, for a lot of people, it might be worth just kind of waiting. There's just some good inventory out there, but I think we're going to get more. We will have people that will be interested in selling. They aren't right now, but they will get there. And there'll be more opportunity for people.
And I think a lot of people might be in, because of the high HOA fees are going to have to sell no matter what. We've seen that as well. They're in a position that they can't hold on to that, $1,600 a month and turn and make and make the payments and keep going in their lives. So because of the have-to sales, of course, that'll lower it some altogether. But I also agree with you, Andy, that I think that over the long run, I think that the prices of real estate are always going up. It's just, are we going to go in a holding pattern and go down for a little while? It's an adjustment. You know what I mean? We're at one of those points that everything needs to sort of come to a point where it works for everybody.
Well, I think the big thing's going to be is what's going to happen with these assessments. The condo price might come down. It's rare that you see a reduction in your assessments, a reduction in your monthly maintenance fee.
Let me add one more thing, particularly here in Kona, is that most of the condos are on the older side. We don't have too many new condos. And so as the condos are older, they need more maintenance. And we're coming into that particular point that, the assessments just to keep the maintenance up of the condos is going to continue to go up. Yeah, and the cost of fixing things goes up too. So you've got, not only do you have the HOA fees because of insurance, but just keeping the condo working.
Right. So let's talk to Joe about that. Joe, when you're qualifying someone to get into one of these condos, do you think about that when you're about to give them some cash that maybe in the future, the price of owning that is going to go up to a point where they no longer can afford it?
No, I don't.
So
honestly.
you don't like put that in thinking, this might actually cost you more in the next 5 years. So no, it's what it is now.
Everything's going to cost you more. Honestly, if you buy a single family home, your homeowner's insurance and property taxes are going to go up. You buy a condo, your HOA, your property taxes and your homeowner's insurance are probably going to go up. You buy a car, your car insurance is going to go up,
It's so fun.
I don't factor that stuff in when I'm qualifying. We do look at future assessments, right? To make sure that, okay, who's going to be paying this if there's deferred maintenance or something like that. But from a qualifying standpoint, we just deal with what we have. I can't predict what's going to happen in the future, nor do I try. So I don't. Although I am obviously looking at HOA documents a little bit more, with a fine tooth comb there in Hawaii, because in fact, everybody was a little bit underinsured with all the deferred maintenance. Deferred maintenance is key with Fannie and Freddie Mac now with the Florida condo complex that collapsed. Then they were looking at insurance plus deferred maintenance. So with the combination of the two, we're kind of really looking at that just to see what's going to happen with the HOA in the future. But I don't factor in any changes that may happen down the road.
There you go. And Amber, your thoughts on what's going on?
So just to talk about something a little bit different on the same topic, is I think a lot of people are kind of unaware of how this stuff could affect them. So I think it's really good that we are talking about that. That's what I have noticed. I don't think that people, again, I don't work with as many people specifically with condos. So I do obviously see the insurance and different issues. And HOA stuff over here in East Hawaii, but I do talk to a lot of people that toy or have a lot of clients who that is kind of like an alternate plan, maybe buying a condo. And they just do not even realize like the amount of things that you need to factor in, and like these insurance things and, special assessments. They just don't even know what they don't know. So yeah, it's important for people to be in the know. So that's just what I'll say about that.
Yeah. Well, I remember
Could I step in?
a year and a half ago when Amber was like, oh, the insurance costs are going up in East Hawaii because of the lava. We're like, oh, too sad, too bad. Da, da, da. And then all of a sudden it's like, oh, looks like you're going to get it too in West Hawaii on the mortgage, I mean, on the condos. And so now we're all suffering equally, right?
And one more thing is that it's right now, since some of the insurance have gone up and some have not, it's still in that transition period. And so when looking at condos, the people that are selling the condos aren't going to say, hey, your insurance is going to go up by $400 in 3 months. You know what I mean? Or they might not know. They just know. In other words, at this point, we know when the policy gets renewed, it's going to go up no matter what. But they don't know what it's going to go up. So a lot of times it's not stead. So you really kind of have to dig in there. That's what Joe was talking about, to figure out what's going on, because it will go up. And it's, if you're, thinking, oh, this is going to be great, and all of a sudden you buy that condo and then your first payment is, $400 more than you were thinking it was going to be, like, hey, that's not cool.
Yeah. In fact, Eric brought that up because that's exactly what we were going through with somebody that we have in escrow right now, where there was nothing said. And then Eric and I dug in a little bit deeper, and then, oh yeah, by the way, yeah, okay, in January it's going to go up $400 more a month. But if we hadn't asked that question, then no one would have known until that showed up in January. So definitely knowing what's going on and digging deeper. That way you know what you're in for. And then the woman that said, you know what, since I have to pay more now for what it's going to be for my HOAs, she negotiated for a lower price on the condo and then got it. So there's ways of going around some of this stuff by getting a lower price and negotiating down. Because like Eric was saying, that I think the prices of condos are going to have to go down to go up with what the HOAs are, and negotiating that out is one way to handle affordability. So and also real quick, just because Amber and Andy were talking about this, CC&Rs. Read those and understand the reserve studies and all the stuff. And that's another reason why, realtors are not completely responsible for walking you through that stuff. Right, guys? So do you guys, say, hey, it's your job to read this. You might want to get a lawyer if you want to take a better look at it, or, look at with your accountant. I mean, what do you guys say when you say, hey, go take a look at these CC&Rs? Because almost every subdivision on this whole island has CC&Rs. This isn't just about condos. So what's your advice again on all that?
Yeah.
Amber,
I can start out. We are not experts on anything. We are sort of the general person that takes you through all of the different parts. When you get to the details, you need to consult the expert to find out what exactly those mean.
Amber, is that what
yeah, and if people have questions, I would say a lot of the neighborhoods in East Hawaii comparatively to West Hawaii maybe don't have CC&Rs, that there certainly are some that do, and it can be a little confusing because we were talking about the area down by beaches earlier, and a lot of people refer to that entire area as beaches. Technically, it's 4 separate subdivisions. One of them does have CC&Rs, and then some neighborhoods have HOA and annual road maintenance fee, but not CC&Rs. So it is important to do your due diligence. And if you do not understand something in the CC&Rs, you can certainly ask your agent. But a better thing to do usually is like contact the homeowners association if it's a question that needs to go to the county planning department, maybe to do that. But yep, it's usually like, we'll, send you to the website, send you a link. That's how it goes in East Hawaii often. And then, yeah, that is on the buyer to make sure that you're good doing your due diligence on that.
There you go. And Andy, anything else to wrap this up with in terms of what you think about what's going on with HOAs, CC&Rs, and everything else? The tips?
I think you guys pretty much covered it. I mean, the real big thing is, just as we've already said, is just making sure you go through that and understand any restrictions. Things like, where are you going to park? Do you have an assigned parking space if you're moving a condo complex? I mean, I've seen somewhere they just assume that the parking spaces are right there, only to find out that they're, a street over. You know, you have an assigned space, but it's 2 streets away from it. I held an open house open only to find out that the spaces were not where we thought they were going to be.
Yeah.
I'm amazed at the people that don't read them. And then really, you've got to really understand, if you don't understand them, you need to ask somebody who can help explain them to you, the financials of those, to make sure that they have enough reserves. You know, are there any assessments coming due? You know, and you're right, a lot of times they're not going to know. They don't release until like the last minute.
Yeah. Yeah. And
I could add one thing on the parking. We had one case where they assumed that they had 2 parking places and the condo complex only had one, and the second one was like you were talking about, and it was across the street and down the way. And so, you know, that was a deal breaker for them. That complex wasn't worth, you know, wasn't worth doing with one parking place at their place and the other one too far away.
yeah,
Right.
and having to run across a busy street to get back home. So, so yes, ask lots of questions. Okay, with that, then we will let you guys go, and thank you very much. And you guys look for October. We're going to do this on the 17th, and hopefully, you know, we can see what the fallout is of lower interest rates, and Joe will come back and see if they've, you know, see kind of like, you know, our mortgage applications going through the roof, what's happening with, you know, anything else that's going on in the national scale. And each of these wonderful human beings are our realtor partners, and to reach out to each of them based on where they are. Our expert East Hawaii is Amber, expert South Hawaii is Andy, and Eric and I are in North Kona, and Janna is definitely on the Kohala Coast and in the Waikoloa Village and Waikoloa region. So, and also if you need a mortgage, obviously Joe's your man. So I will put everyone's contact information in here, and we appreciate you guys all watching this show. It's nice to know that we have hundreds of people who watch this, and we are the voice for real estate on this big island. So you guys, thanks again for all the insights that you lend to this every single month. So we'll see you guys next time. Okay.
All right.
Aloha.
Aloha.